Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family. Please note I don't have WhatsApp or Telegram. This week has been a huge earnings week. Combined with the FOMC meeting, Apple and Amazon reported their latest quarterly results after the close, as did Google's parent company Alphabet. Apple has been having a lot of issues inside China, and Apple's sales shrunk as COVID disruptions caused China production to slow. Amazon is warning of periods of slower growth, and Google posted the first drop in ad revenue since the pandemic dip. One fascinating thing that we'll look into a little bit more deeply is Meta platforms. Meta platforms did incredibly well, and we'll look into the technicals on that using the CTKS method. In 2022, as the Fed raised interest rates, it put a lot of pain on a lot of companies, and we can see job layoffs in the top 5 industries. Inside technology, 97,171 layoffs. Automotive, around 31,000. Healthcare, about 30,500. Financial, nearly, say, 24,500. And the services sector, nearly 22,500. This is in stark comparison to 2021. What will 2023 look like in terms of layoffs? Please let me know what you think inside the comments. When we look at the headlines on the Wall Street Journal, the one thing that you probably pull your eye to is Bitcoin. Crypto is becoming mainstream. It's making the headline of the Wall Street Journal, the top page, the front page, every day. It's also creeping into the headlines. Stock, bond and crypto investors bet the Fed is bluffing on interest rates. Oh, Fed, how could you? And we can see Jerome Powell hanging out with our BORSOG eagle. Ah, what a nice couple. There's the potential that the Fed is bluffing, but the ECB is not bluffing. It's raised rates by 50 basis points and signals again the same thing in March. When we look across the news headlines inside Reuters, we see Apple forecasts another revenue decline after a quarterly profit miss, and Alphabet, the parent company of Google, misses street estimates as the ad business slips after a pandemic run-up. Also, we note that Amazon's outlook disappoints as customer budgets stay tight. And why are they staying tight? Jerome is there to explain. The central banks raising rates put a lot of pressure on a lot of people, businesses and consumers. For example, mortgage rates fall again, but where did they start from? On January the 6th, 2022, they were 3.22%, and they came up and peaked at 7.08%. That's a lot of pain for mortgage payers because they're actually having to fork out much more money. But if we do our EC charting, we can see that this particular mortgage rates, they're losing a level of support, and we're really happy about that. We can see the cut-through has actually occurred. Now that we have some pretty good background information, let's run the numbers. We can see that Bitcoin is down 0.87% to 23,538. Ethereum is up 0.28% to 1649, and happy belated birthday Vitalik. We can see in the last trading session the VIX spiked up a bit after falling pretty significantly, and we saw the major market indices rally. This is why I show you this bit of an overview of sector performance each and every day that we do this work together. It's really important to gain a perspective on how the different sectors are moving. Bond prices are trying to break through just very short-term resistance, and we can see that bond yields have just done a little bit of a kick up after falling down below a level of support. What will happen next is really interesting. And what we're also seeing, what happened to gold? Gold actually fell as the dollar rebounded. On weaker economic output and data, We can see that oil is making its way down, but we also notice that junk bonds have done a leg up. They've overcome a level of resistance and they're on the way up. So the market sentiment is pretty much positive. When we look at the S&P 500 ETF Trust, the SPY, through the CTKS method, we can see that we actually did that pinball effect, and this is always on. You'll see time and time again, price goes to a particular support level, goes back to resistance. If the support level is strong, it won't make it all the way down, and that tips the probability for it to go into that smart money sell area. If it actually wobbles around a little bit there and consolidates, you often see the next pinball action for the upper bumper to come into play. And that's actually what we saw with the SPY. One thing that Apple has reported pretty nasty earnings. Why do I say nasty? Because Apple is one of the go-to stocks to go to in the stock market. And anytime Apple actually misses, it's really bad because Apple doesn't miss. Apple has a long history of beating its EPS and also revenue expectations, so just bear this in mind. Amazon also missed its earnings per share by 82.6%, but did report a surprise in revenue, up 2.35%. Alphabet, the parent company of Google, also had a negative EPS surprise and a negative surprise on its revenue, but it still did pretty well, 76 billion. That's not too bad. We do our CTKS code, our three-dimensional risk management every single day. What do you feel about the markets? What's going to happen given the potential news, well, the actual news that's come through just recently? Is Michael Burry, Cassandra, correct? And there were so many great comments on what is Cassandra. Wow, we've got such a brilliant global family. And it's great to see that Michael is back. Good old Cassandra. Our beloved global family reached out and said, hey, Cassandra is all about the Trojan priestess, dedicated to the god Apollo and fated by him to utter true prophecies, but never to be believed. What is Michael saying? Nobody believes him? Cassandra could actually see the future and had accurate prophecies, generally of impending disaster, but was not believed. One thing that we always need to do is to contextualize earnings. Meta released after the close, so that was reacted to before the open today. And after the close, today, Amazon, Apple, and Google, Alphabet, the parent of Google, all released, and they weren't such good releases. Well, not the releases the market was hoping. We know that the SPY has basically rebounded, has pinged off this bumper up to this bumper. We're currently underneath it. With all the negative earnings coming through the market, that's going to disappoint a lot of investors, and fear could enter the market very well. And we may see the SPY come down to several different support levels. For example, around 409 would be very fair. If we get down to the 406 level, everything is fine because we're still in a fairly good uptrend. And even if we wobble around this area all the way down to 402, that's not too bad either. But the concept is, if people believe that the market is starting to turn over, they may actually take their risk off the market. And you can see how important it is to know where smart money is stepping in and stepping out of the market. And you can learn this through the CTKSmethod.org website. I thought I would do a quick analysis of Meta platforms for you. From the news today, Meta platforms shares surge on cost reduction and stock buybacks. And Meta has put in one of the best single-day performances since July 2013, when it rose nearly 30%. It was up 23%. Well done. Meta is currently up 57% year-to-date. Microsoft, Apple, Google, Meta, Amazon, Tesla, they all did really well. But don't forget, they reported their, well, at least Amazon Google and Apple reported after the bell. The markets had really high hopes for really good performances, and they kind of didn't materialize. Meta is seeking to cut and reduce costs and also doing a $40 billion share buyback. A little bit of background on Meta Platforms, formerly Facebook. As of 2022, it had 87,314 employees. Meta owns Facebook, Instagram, and WhatsApp, amongst others. And the CEO is Mark Zuckerberg. Meta's earnings per share actually missed by 20.8%, but there was a good positive surprise in reported revenue. It was 1.54% greater than expected. We can see that Meta's earning estimates are going to be fairly range-bound at the current time throughout 2023. There's a lot of divergence with analyst expectations. Looking into the quarterly financials, and year-on-year revenue actually decreased by 4.5% approximately. Net income declined by a little over 52%. The net profit margin was nearly down 50%. Operating income nearly down 42%. Net change in cash, well, they had a cash inflow and that increased nearly 204%. What is the consensus rating on Meta Platforms, or just Meta? It's a moderate buy, with a consensus target of 203 and 10 cents. The predicted upside is about 7.6%. I've just popped that target in for you, that 203 and 10 cents. Looking at Meta's income statement, you can see that the net income attributable to common shareholders is down considerably. That's that 50% down. But you can see just how out of control total operating expenses are. Yes, last year in 2021, they were $48 billion, and now they're $62 billion in 2022. This is a very large increase, and you can see that increase here in the chart. Total operating expenses must be managed to manage profitability. But there's a certain quality to operating expenses as well. Research and development, we can see the very big push that Meta did, up from $24.7 billion to $35.3 billion. That's investing, Mark Zuckerberg investing in the metaverse. And the metaverse will become really important. And I can only say, get ready, player one. If you know what I'm talking about, let me know in the comments. We can see the gross profit wasn't hit that hard. It's not like what happened to total operating expenses, and we know where that's coming from, predominantly from R&D, which is an investment inside the future, and that's a good thing to do. Looking at Meta's balance sheet, we can see their cash and cash equivalents are coming down, and that's been happening for a while. Their short-term investments, they're coming down. Their trade receivables are staying a bit around where they were, a little bit flat, but with a down perspective. Their prepaid expenses are increasing. Mark, what are you up to? And total current assets as a whole have been decreasing for a number of years. We can see that property, plant and equipment has been boosting up. Potentially some of that R&D funding is flowing through to CapEx. Overall, we can see total assets actually going up, and this is not a bad thing. Current liabilities are increasing. What's a bit concerning is that total liabilities have taken off from 41 billion to 60 billion. When companies get too heavily into debt and when their cash flow is getting drained, that's not such a good thing. There's still quite a lot of retained earnings, 65 billion worth. Financial analysts look at the income statement, the balance sheet, the cash flow statement, and they look at a lot of other things. I was classically trained as a financial analyst. One thing I find quite interesting, Meta's net income is literally back at around 2018 levels. It's a little bit more, but it's around that 2018. And one thing I would be a little bit concerned of if I was a shareholder, but hey, I love crypto, so I'm in crypto. But the concept, share-based compensation, is really, really growing. If share-based compensation is going to the workers, that's a really good thing. That binds the people who do the job to the performance of the company. But often it's the executives that take the lion's share of share-based remuneration. But that's something that we would look deeper into, but it's not a particular red flag. What is quite good is that the cash from operating activities has remained fairly good considering all the hardship in the income statement and the balance sheet. We can see that Meta seriously reduced its purchase of investments year over year, and also the sale and maturity of investments as well. That's way down. And we can see, looking further down, the change in cash and cash equivalents is a little bit more. It's showing a drain on the company's resources. But when we contextualize this with the income statement and the balance sheet, we're not surprised at all. When you look from a fundamental technical perspective or fundamental analysis, you would be hard-pressed to understand why Meta put in such a big rally, but we can explain it through the CTKS method. One thing that smart money does, it knows where the support and where the resistance levels are. We can see with Meta platforms, or just Meta, Meta was above a smart money buy area and showing strength. You always get this ping pong kind of pinball action between different levels of support and resistance. There was an air pocket here, and that air pocket actually created the momentum, if you like, to absolutely magnetize Meta's price up to the higher level. But you can see it's actually been selling down because that's a sell level, and the smart money knows where these levels are. Retail doesn't. We can see that Meta actually closed at 188 and 82 cents, and post it's trading at 185.47. The issue is it struck this area of smart money sell activity. It was magnetized up to it, and there was a lot of elation inside the market. Oh, the Fed is pivoting because it's not increasing rates as much, and therefore it's going to do quantitative easing. It's just easing. It's going to put more money back into the system. And you can notice that the target of $203.10 is just one more smart money sell level up on the current one. These highlighted zones are called Stanfield zones. They're where smart money steps in and either sells or buys. They're incredibly important to understand. You can see that we went through all the fundamental analysis and it looks like a disaster for Meta. That's why I actually specialize in technical analysis, because the fundamental analysis is very, very important, but the technical analysis is what makes you money. If you want to know what smart money knows, if you want to understand how you can create your own targets just like the professionals do, you can learn the CTKS method. And the beautiful thing, you learn it once and you can apply it for a lifetime. Wow! Based on what's happened in market today, do you expect that Meta will continue to rally up and touch that target, consolidate and go flat, or come down? This is a very important question to ask yourself. And when you understand how these actual levels operate and interrelate with each other, you're going to see things that only smart money can see. Do you think, given the news, that people will take profits and we might make our way down? Or do you think we'll go flat or up? Please let me know in the comments. And I hope you've enjoyed this little trip down memory lane to when I was doing this kind of financial analysis. As we're crypto focused, why do we spend a lot of time looking at the main markets? Because we know Bitcoin cannot escape the stock market's gravity. What happens inside the main markets doesn't stay inside the main markets. It spills over into crypto. It spills over into bonds, into yields, into metals, into everything. And thank you for everybody letting me know that actually putting this information inside the chart helps out. And we can see non-farm payrolls and the unemployment rate are coming up. And the ISM non-manufacturing PMI is coming up as well. So the question is, what happened to Bitcoin? Well, we know the answer to that. The main markets happen. And what does this signify to us? Obviously, the DXY rallied. And with the DXY rallying, what does that mean? To keep a pinpoint on where we are in terms of smart money buy and sell levels, I just stopped them at the current price action. And what we saw is the DXY did in fact rally, and it's got over a level of intermediate resistance and turned that to support. Now this is really, really important. Now let me extend these Stanfield zones for you. This extension is just to the current price action, and we can see the DXY trading at 101.739. What actually happened here? We came down through multiple levels of smart money buy, and that creates a kind of momentum which tends to ping it up to smart money sell levels, especially after a traumatic or climactic sell-off. And this is something that we see inside the markets all the time. Please keep your eye on it. We have a particular term, sharp angles ... Please let me know what that is inside the comments. Hopefully this will give you an idea of the mechanics at play. It's really important to have rules inside the market. Having profitable rules will make the difference. It will take you from retail into professional. What we can see is the DXY absolutely rallied up. It came down, based around, and then found support on its way up. Now we're at currently a smart money sell level. Does this mean that we're going to resume down, go flat, or go up? And you have to put your logic behind this. What could it mean? As professional traders, we keep our eye on the DXY all the time, and junk bonds, and so many other things, the major indices, the yields, just everything, because each little thing is a piece of the jigsaw puzzle. Not one piece solves it. Before I said the DXY came up. Yes, that is something that is particularly important at this time. But there will be a time when the DXY goes up and Bitcoin goes up and the stock market goes up as well. Be aware of this as well. Having flexibility as a mental trait is really, really important. And tomorrow, hey, guess what? We're going to talk about the trader's mindset. And on Sunday, we're going to do a specific episode on positive excellence. And positive excellence is one of the fastest ways to become profitable inside any market. And it's something that only the professionals look at. Looking at gold, and this is a good thing to look at, we saw that the DXY rallied up, and what happened to gold? It came down, and it came down fairly traumatically. Again, I'll just extend these lines so we can just look time and time again as to where we were at the last video. One thing, before I do that, note, if you didn't know what the smart money buy level was, you could just expect this thing to fall forever. But this smart money buy level actually is a gravitational attraction for buyers to come in. And it's not formed from recent price action. It's formed from all of price action through the CTKS method. One thing that we can see as gold actually broke down from this smart money sell level, all the sellers were in here pushing the price of gold down. Remember that 1940 level was very, very important. What happened? When the DXY started to explode upwards, gold started to implode downwards, but it was caught by this smart money buy level, and that took the pace out of it. Why didn't it just stop there? And this is a misconception that people have. When you have a lot of panic in the market, it's not like a brick wall. It's not just going to stop it. It's more like a safety net that bounces up and then retraces, bounces down. And when we look at this particular trend, we can already see we're starting to get above an intermediate level of resistance. Does this mean we're going to come back up and at least test this area? That is what the probabilities would tell us. If this is in fact the case, we would expect the DXY to make its way down to its next smart money buy level. But what happens if it goes the other way? Because as professionals, we don't have one position, we have three. We look at the market from a down perspective, from a neutral perspective, and from an up perspective. If the DXY starts to continues to break out to this side, gold will continue to break down. What do we actually anticipate? The potential is that the DXY will come down, but we do have to keep our eye on it, and we have to be very flexible. If this actually happens, we would expect the price of gold to come back into this 1940 level. If we get some really big reductions in the DXY, we could expect the dollar to ping back up around to this 1968 level. So just bear that in mind. But if the dollar actually keeps on progressing upwards, we would expect gold to reverse down to around the 1911 level. Have your three strategies playing out at all times inside your head. We look at Bitcoin because Bitcoin dictates, literally, it's a dictator, naughty Bitcoin, of the entire crypto industry. If Bitcoin's price just rallies and goes ballistic, all of the alts will say, hey, Bitcoin, don't forget about me, and they'll all run with it. And they're really fast. The alts will outpace Bitcoin, either to the upside or to the downside. Currently, Bitcoin is $23,542. When we look at Bitcoin, we can see that Bitcoin, the buyers are trying to come in. It hasn't even reached this smart money buy level at around 23,300. And it's interesting, when we were talking up here, when Bitcoin was just breaking out and it was just going ballistic, I was mentioning don't be at all surprised if it pulls back to around the 23,300 mark. This is always on the cards, especially after a big push. When you've got too many longs being attracted into the market, it creates a field day for the shorts. And the shorts love liquidating the longs, but the longs love liquidating the shorts. So it's a fairly even game. But what do we see here? There's actual positive momentum in the market at the moment. If traders, main market traders, expect the DXY to hit that smart money resistance and actually back off, we would expect Bitcoin to back up and do quite well. So keep your eye on that from a perspective. If we actually come down to this smart money buy area here and the buyers step in, that's a good thing. If we start to slice down traumatically through this smart money buy area, it means confidence in the main markets is lacking, and that could very well occur. Professionals know it's all about stacking probabilities and being aware. No ego plays any role in professional trading because you're focused on getting your system right, getting your predictive capability right. Now, how do you predict the capability of prediction of your systems? Through your synchronization factor. If you are synchronized, your systems are working in alignment with what you see in the market. If you go out of sync, it could be the market changing character, and the market changes character all the time. But this is not a reason to give up or anything like that. It's just a reason to modify yourself, to create more learning. Always keep in mind that the market always dictates your returns, so consider the market moving against you first, going nowhere second, and going for you third. If you actually do this, you're getting into the professional mindset. And don't worry about certainty. You don't need certainty. You just need a strategy to profit from uncertainty, and all the money is made when the markets are uncertain. As a community, we focus on positive excellence. Positive excellence is what every professional trader who is consistently profitable has. They just have this by default. They're always learning. They have humility. They know that the market can turn against them at any time. It's like a wild beast, but it's a wild beast you can anticipate if you give up certainty. So what replaces the certainty? Skill, and actually stacking of probabilities. Inside the masterclass, we do deep dives on all of the things, all of the pieces of the jigsaw puzzle that you need to know. Needing to know something is one thing. Needing to be something is a different thing entirely. Positive excellence is where we learn to be the best version of ourselves that we can be. And to do that, we have daily positive affirmations for abundance, financial success, and happiness. This is through the CTKS Creed. These I statements are just words that you say to yourself with feeling. If you find you say any of these sentences and they just don't ring true for you, it could be that you need to do a little bit more work in that. For example, I know the universe is designed to make me succeed. If you say, oh, Ken, you know the universe is totally against me. I'm always getting crushed by things. That means you're having a negative reaction to that sentence. That means that you can put this on the radar to say, be quiet, brain. When it comes to the universe, I know it's designed to make me succeed. Okay, I've had some bad runs in life, and everybody gets those. But the future is looking fantastic, and I know the universe is designed to make me succeed. See the difference? It's an amazing difference. It's a life-changing difference. Every day I show kindness, integrity, and gratitude. Again, if you have a negative reaction to that, think about that. Does that mean you're not very kind because you don't want to show kindness? Integrity may be a little bit low. Gratitude? What's gratitude? I don't show gratitude. I'm entitled to everything. I demand that the minions serve me. If you're thinking about kindness, integrity, and gratitude and saying something, oh, that's so weak, people who show kindness, they're so weak. It's actually something that we'll examine across the weekend. And you'll find from a trading and investing perspective, if you're not kind to yourself, you're actually going to lose money. And if you're not kind to others, you're going to lose relationships. There's a lot of other things in here, so I would just suggest you read it for yourself and you think to yourself, am I getting a positive thing from this or a negative thing from this? And if it's negative, that's really good because you've identified an area where the entire world can open up to you. One thing that I will definitely read out, I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. We know better habits create a better life. So when you get better habits, and these just are habitual statements that you can say to yourself, and your mind will believe them. You just say them often enough, they will come true. And these are very, very powerful statements for your success, your happiness, your abundance, your meaning in life. They're well worth taking the trip down this particular path, especially if it's new for you. Tomorrow's video will be about the trading mindset, and the next day will be about positive excellence. I just wanted to give you a very special bonus. I just looked at the DXY and it's starting to come up, so it's starting to look like we're going to go up to that 102.025 level. Please let me know in the comments, what do you think this means for crypto and the main markets? Take care out there, my friends, and I look forward to seeing you tomorrow. Bye for now.